KFin Technologies is the company we are speaking with next. The stock has surged over 100% this year, 110 to be precise. JP Morgan in a recent note says that the company's overall AUM market share has been growing, but equity market share has seen some weakness. Now, of course, equity is where you make money. To discuss this and more opportunities that the company may be seeing, we have Vivek Mathur, Chief Financial Officer at the company, joining in now. Vivek, good morning. Great to have you with us here. Prashant, this side. Now, let's just talk about the mutual fund business, right? We all know the headlines scream out at us every month, record SIP flows, but stoppage ratio is also quite elevated. That does not get that much of a play. Could you tell us what is the net growth you are seeing in your AAUM and what are the expectations here for FY25?
Thanks, Prashant, for hosting me today. Overall industry growth remains buoyant, backed by the retail participation, which is at historic high. So if you see the retail investors, the ticket size itself has gone up by 20% year on year at the end of June quarter as per MFI. So we are also witnessing that a 30% plus growth in the AUM is expected. The SIPs continue to grow every month that you hear about retail participation and the stickiness of the retail customers. So the net inflows is basically a combination of what comes into the market from fresh inflows minus redemptions and also the market growth. So we continue to witness an increase in the the net inflows. So it's a combination of 50-50, which is net inflows and market growth put together, which gives a boost to the overall AUM. And we are witnessing that, this buoyancy continues in terms of retail investors, increased participation, leading to the growth in the overall inflows. We feel that, as a company, we will mirror the growth of the industry. We'll actually outgrow the industry. The equity growth that you talked about for KFin Tech, it's a cyclical in nature because some of the AMCs come up with NFOs at some point of time in the whole year at different time of cycles. So it does a catch up over a period of time, but overall we remain buoyant. We do expect that the momentum will continue for FY25.
So you said 30% for KFin Tech in 25?
30% for KFin Tech, yes. So if the market grows at let's say 28% or 29%, we will outgrow the market because we have a large number of AMCs. We have 25 AMCs. So overall growth more driven by the small and mid AMCs with boost of B30 cities pouring in, the distributors playing an active role, the growth in direct playing an active role, the retail participation going up. We are witnessing, growth.
And this is net. This is net of stoppages. Net of stoppages. The adjusted number. Okay.
Yeah. So the 30% will have two bifurcations. 15% will come through the market growth. Another 15% will come from the inflows. But it is basically a combined effect of both.
Mr. Mathur, hi, sir. So I'm just going back to the earlier stated guidance. I think you've maintained that at the top line, there should be 19% CAGR growth going up all the way to FY 2027. And at the bottom line, that CAGR is going to be 24%. Now, looking at the buoyancy in the market, looking at the way the equity segment is booming, and also I think you're looking at expanding some of your other segments. Is there any reason to believe that you could be exceeding this guidance as well? I mean, 19% perhaps is too conservative?
So if you see, this is the overall growth of the company. Mutual fund BIPS-based revenue is just 64% of our revenue. We are a diversified company. Overall, 70% of mutual fund revenue has two components. 64% comes from BIPS-based revenue and 6% comes from value-added services. Then there is issuer solutions business where we help companies go for IPO, which is 13% of our revenue. Then there is international and other investor solutions business, which is another 15%, 13% of the revenue. So overall growth, while we maintain that, there is growth of CAGR of 14 to 15% in domestic mutual fund revenue, which we are seeing buoyancy in terms of, market going up. But other businesses will also continue to outgrow this growth. And we believe that on a holistic basis, 18 to 20% growth in top line of KFin Tech is something which is doable. And that is the guidance that we have been maintaining. There may be quarters where you'll see a sudden jump because of market growth or because of large number of demat accounts opening up, because of large number of IPOs coming in. But on a steady state, we maintain that there will be 18 to 20% CAGR
Sure.
on the revenue.
Okay, just give us some sense, because on the other segments as well, I mean, what the strategic focus is, and if if there's something immediately on the horizon. I think there's also been a lot of talk about you looking at potential acquisitions. So have you identified anything? And again, which segment are you looking at? There's been some chatter about growing in global markets. I'm talking about the other businesses as well, global business services, and there's issuer solutions. So beyond mutual funds, where else is the focus? And if this inorganic growth comes in, then which segment are you targeting actually?
So the focus is in terms of growing international business. What we have done in the mutual fund RTA business in India and RTA business in India, we have successfully replicated in terms of gaining market share, being the only third-party outsourced player in Southeast Asia. But the segment that we are looking at growing is the fund administration segment, where we have launched the platform called Exalt. And we are now looking at, taking this fund administration business to countries like Singapore, Hong Kong. We have already won a client, fifth largest bank in Thailand. There is another client in Canada. We are looking at setting up legal entities in Singapore, Dubai, subject to regulatory approvals. We are also looking at an active acquisition. We have been exploring acquisitions, and we are looking at acquisition which will give us segue into, clients from US, Europe, the Cayman Islands, Luxembourg, Ireland. Most of the funds are being managed out of Singapore or Dubai or London or US. While there are, countries like Cayman Island, Luxembourg, Ireland, which gives tax advantages to the fund managers. So you will see in coming, 18 to 24 months, KFin Tech aspires to become a global player in fund administration. And that is the segment we are looking at in terms of acquisition.
And what's the timeline? Acquisition, is there anything progressing, anything hot?
It will be too early to say that there is something which is going to get materialized very soon, but we are working on a couple of target companies, and you will get to see more information about it in the coming quarters.
Okay, so just extremely quickly, sir, also on REITs, there's been some talk that you're going to start that line of business as well, a solution for the REIT market. What's happening there, and when do we see a launch?
So it's something where, we have been working with the regulator in terms of, we have developed a platform for invite ITs and REITs. And that is something where it's, as RTA and fund administrator and fund accountant, you can manage folios, you can do unit calculations, you can, calculate the NAV, you can manage the folios of multiple holders of the same asset. So it is not something new for us. We have been doing it for long, and whatever the regulatory framework comes up, we are ready to support the regulator. We have been working very actively in terms of even, you would have read about Paras platform that we developed for SEBI. So this is something which, with 1,000 plus IT engineers and Center of Excellence based out of Bhubaneswar, and another one coming up with Vijayawada, we are at the core of innovation, helping companies do their data analytics, and coming up with innovative products. We have launched 31 products in the last 5 years. So, we are trying to change the way the entire ecosystem works to be more agile, to be more innovative. So that's what we are working on.
All right, Mr. Mathur, appreciate you stopping by, giving us all of those details. Wishing you and your team all the best. You look set for good growth in the next few years. We look forward to catching up with you later on in this calendar year itself.